live on the Pro Desk virtual trading floor. I am live on the Derrick the Trader YouTube. And I am going to get started with our disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I got stopped out of Facebook today. So naturally, that's the one that's got a little news here after hours is popping a bit. That happens, is what it is. Really tough day today, man. Let's talk about it. So I came into this morning's trading session, and basically what I said was that I think the exact term I used was I am a cautious buyer. And I bought small, for the most part, on a whole bunch of stocks pre-market at what seemed like were pretty good prices because we're having a large common gap to the downside today. The one that I actually bought a bit heavier, which I got a little bit lucky on, was Labu, which is the leveraged XBI biotech ETF. What did I just say? Leveraged biotech ETF, the leveraged XBI. So I got a little bit lucky that this XBI was actually able to close, flat to green, and therefore Labu was as well. So I got a little bit lucky with that, but overall the thought process, I guess, was wrong. I was thinking two things at the same time. So one thing that I was worried about was that this was just the second morning. Usually when you're trying to be aggressive on those dips, you want to be looking at like day 3, maybe even day 4, not just the morning of day 2. And I would consider yesterday day 1, right? Because before that, on Monday, we had a strong rally off this pivot. Yesterday, we had this really weak day. We talked about how this is not good to lose the Monday low because that was where you're getting continuation, that we still were above the pivot low on Friday, but we discussed that most likely we're going to lose this low. What I wasn't necessarily expecting when I was saying that in the afternoon meeting yesterday was that we were going to have a gap that's as big as it was, that really brought us well below yesterday's low just based off that. I think what I had spoken about was I laid out a few scenarios here from the market. One scenario is that after yesterday's trading session, we just immediately trade back up. I thought that was the lowest probability. The second scenario was that we break this pivot low, the bears resume control, we see a sell-off like what we saw here in January or in the second half of February, and we just roll all the way back down because this buying was just short squeezing and hedging covering, and that's that. I thought that was the second highest probability situation. And I thought that the highest probability situation, and we are kind of seeing that as of today's close, though today's close isn't giving us a tremendous amount of clarity. I thought that the highest probability situation would be that we actually just kind of pull back here, maybe test 445, maybe test this low. So we said in yesterday's afternoon meeting, and that actually turned out to be one of the better trades of the day today, this 443.71, where we're piercing this 21 EMA, and we start to build out some sort of wedge pattern here. So that is what I was kind of looking at and looking for. The surprises to me today was, first of all, the degree of the gap, and the really big surprise to me, honestly, that caught me off guard and I would describe as like a really low probability situation, is the lack of a pivot low coming into the market at any point in the first 30 minutes of the day, given the extent of the gap down. That's like really, really rare. We have a large gap. It is technically a common gap. It's into the 21 EMA on the daily chart here. That's going to breed, and this is what we discussed in the morning meeting today, that's going to create a lot of initial downside extension for the market on a small time frame. And as we all know, just because you have a market that's extended up or down doesn't mean that it can't become more extended, particularly when there is panic selling or whatever. Just got to type up this SoFi. Oh, SoFi is getting totally wrecked on that. So particularly, you have this big gap down. Sometimes those large gaps can create panic selling. So that would actually make a market that's going to be extended from the gap become even more extended just because of, obviously it's trading lower on panic selling. So you rip right down right away. When that happens, you usually get a pivot low that comes in the first 15 minutes of the day. Sometimes that pivot low will take as long as 30 minutes to come in. And sometimes, in rare circumstances, which I would not expect at all today, like a real, like if you were looking at like this trading session right here, we're on the 5th day down and the market's getting massively extended. Sometimes in this type of situation, you might even see panic selling that lasts for like a full half day, and then you get a big pivot that comes in midday, and then we kind of trade back up at that point. So the biggest surprise to me today was that I really thought we were going to get a tradable pivot point in the first 15 to 30 minutes of the day, and we just really didn't. And the SPYs actually were best. The Qs, look at the Qs in the beginning, like just so bad. Look at the IWM here in the beginning of the day. Atrocious. Just so bad. This actually time corrected a little bit and then gave continuation. But you don't have a single green 5-minute candle in the SPYs or Qs until 10 after 10, which is when we did see a little bit of a pivot actually come into the market. So the kind of cautious buying that I did pre-market certainly didn't pay, except for honestly I did a little bit with that Labu, but that was out of just pure luck, to be totally honest. The cautious pre-market buying I did certainly did not pay, and this market here was just ruthless. But I think that we navigated it as far as our intraday communication went on the virtual trading floor really well, because we're not. What I always say is we don't catch falling knives, right? If the market's going to give you that pivot, it'll show you that pivot, and you buy on the way up. So it didn't happen. Right? It just didn't happen. So I'm like sitting here, I'm like waiting, I'm like, okay, we usually get a pivot by now, like, okay, waiting for the pivot to come in. Okay, maybe this is it, maybe this is it. And if you got faked out by this right here and you tried to buy on the break of this candle and you got stopped out, I actually think that's a really good loss to take, because most of the time, that pivot low that comes in that first 15, 30 minutes in these types of situations is going to lead to a really real bounce. If not, maybe a time correction in a very bearish market that's like a worser case circumstance. So I think if you tried to go long here at this point, it's the right idea. You lost your risk. It is what it is. Move on. It was just incredible to me the degree of weakness that we had, how much we were able to come down in such a short period of time. And then we spent the rest of the day basically digesting it, which, by the way, as I commented, is also really bearish. Look at this 15-minute chart, right? Look at this 15-minute bearish consolidation, bear flag, whatever you want to call it, where look how extended we are on the 15-minute chart because of this gap in first 15-minute bar. That selling continues, and then all of a sudden, with zero bounce at all, we just get a bearish consolidation that just goes sideways from 10 a.m. to 11:45. That's like ruthlessly bad price action. And I communicated that this was very bearish, but I also said at this point, it's after 11 o'clock. I think we kind of just have to wait for the Fed minutes to come out. And then the Fed minutes came out at 2. The thing about the Fed minutes as opposed to an actual meeting is that the Fed minutes, it's not, you usually don't get surprises in the Fed minutes. And again, like we've spoken about a lot of times, when you're dealing with the Fed, it's really all about surprises, and you're going to tend to see those surprises when the Fed actually has a meeting and a press conference and all that stuff. So especially with no press conference being scheduled, we are getting information. We knew that the market was particularly going to be paying attention to the rate of the balance sheet runoff at the Fed, but there weren't any surprises to be expected. So a lot of the times what happens, and I did say this today, what happens in that scenario is you get a lot of volatility and then the market ends up right where it started. And look how close that came to being true today. We more or less started at 446, 2 o'clock, minutes come out. Here at the end of the day, we closed at 446.60. We almost started exactly where we ended almost exactly where we started. I did think that the news, though, off the minutes wasn't bad and was actually in some ways a little bit dovish, to the point where I thought we maybe could see a rally off of it. So what happened in the minutes today, I think it basically solidified a 50 basis point hike on the next meeting. But the interesting part was on that balance sheet runoff. They said that, you know, maybe starting in May, they would start with a $95 billion a month of balance sheet runoff. That is such a tiny, tiny number. Now, the thing is, what really is going to drive markets is how that number relates to expectations. And one thing I did say when we saw that 95 billion come out at 2 o'clock, I was like, I don't know what the market was pricing in on that number. I don't know, you know, to me, 95 billion sounds like an extremely small number, especially when you consider what the Fed's balance sheet looks like. But if the market was only expecting 95 billion, then it doesn't really matter that much. Or if the market doesn't know that, and that's actually a little bit of a surprise, and it's like, okay, wow, you know, that's a very small number. We were pricing in worse than that. That could actually lead to a really big rally. So the initial uptick here made sense to me. This downtick did not make sense to me. But I know that, and this is why I always say whenever we're having these Fed meetings or any news in general, the opposite side of a high volume candle is always going to be really important. So in this case, that's this low. And that's what I said right away. I was like, all right, everybody, now we got to pay attention to this low. And then the very next candle, we broke that low, which was also atrocious. What this means, though, is that every single person who just bought all this volume, as soon as we lose this low, they're out of the money. So most likely that's going to lead to a reaction to the downside, because people who are out of the money are going to sell, they're going to panic out, whatever. So that's then what happened, right? We broke that low. All these people are out of the money. At least these 3 bars of selling, and then the market pivots and finds its footing again and works its way all the way back up, which again that's normal. Probably the best trade I called out all day today was the buy off this low, and I was typing it into the chat, and I was like, oh my god, I gotta just hop on the radio and use words. But we broke the pivot low here from March 23rd, which I had just spoken about, I think, in yesterday's afternoon meeting and this morning's morning meeting, that I didn't think it would happen today, but I thought that if we lost this low, I think I said in yesterday's afternoon meeting, if we lose this low, we'll probably end up testing 445 to this pivot low area, which is 443.71, and that'll be really important, and then maybe we'll get like a situation where we pierce through the 21 EMA and kind of pivot back up on the actual daily chart here. So I just didn't expect it to happen today. I thought that would actually be like a 2-day move, maybe like tomorrow, if the market stays really weak, we'd be kind of seeing that test. So it's really the degree and the speed of the move that was difficult. But the trade that I called out here was, so this low is 443.71. This sell-off here, based on the break of the initial 5-minute 2 p.m. bar, brings us down to 443.47. So we broke it by 24 cents. And the trade I called out, I was like, guys, very low risk trade here, but I think you could buy SPYs back through 443.71 versus that low. It's only 25 cents risk. That's 25 cents risk in a $445 ETF. So it was just a super money trade, obviously. And it started to work a little bit. You know, I talked about watch out here at the 80 EMA, could be a good spot to book some profit. But I thought that we were going to get right back to where we started, and then we'll see what happens. And if we get back to where we started, then maybe we're going to work our way back higher. And this is just kind of how volatility works in these situations post-Fed. It's just like these very short time frame feedback cycles. The initial reaction was higher. We break that low. People are out of the money. It brings it down. This then, you know, we get the pivot point. It works its way back up. By the time we get the flat, that brings new buying in. We got this little bullish kind of consolidation that came in with this inside bar that broke up, that led to new highs. And here I was actually like kind of excited, because I was like, okay, wow, If we can get a close at 448 or better today, that's really what I'm looking for. That will actually create like a hammer doji in here, and that hammer doji could just be the creation of the original thesis that we had that I thought was highest probability from yesterday's afternoon meeting of building out like a bigger wedge here in this equilibrium area that frustrates everybody to some degree. The bears want us ripping all the way back down to 420. The bulls want us right back up and testing 460. Maybe we just start to build out a real wedge of uncertainty here for this market, shake everybody out in both directions, and create things, really, and like just make things difficult. And that's what I was thinking we were going to get if we got this 448 close. And then we didn't. What ended up happening, even though the Fed meeting gave me a little bit of a bullish bias because of that $95 billion number, what ended up happening is what oftentimes happens at these Fed meetings, which is what I had mentioned, is that we ended up exactly where we started. We ended up exactly where we started for the most part. So at the end of the day here, we've got a very non-committal doji on the second down day in a row that overshot the 21 EMA, and it's really hard right now, I think, to make any grand predictions on what the market should do next. I still think the highest probability is like building out some sort of sloppier wedge in this area, and then when that tightens up, we can see which way it breaks on the big picture. But we'll see. Going into the rest of this week, today's low is going to be really important, and 450 is becoming one of these difficult inflection points where we're holding it as support, maybe we hold it as resistance type of situation. So that's kind of the market. I honestly thought that today was one of the most difficult trading sessions that we have experienced in quite a while. Particularly this opening price action today was just so bad. And even though we identified some good trades in here, this post 2 p.m. Fed meeting to end up exactly where we started is honestly kind of trash price action as well. We still did an okay job today, I think, identifying areas to focus on. So one thing that we thought could hold up today was these value type plays like an XLE. And I wouldn't say that XLE was a great trading vehicle, but I think it's notable that XLE is green right now as we're having this conversation when the indices were down, and it still held its range, gave an inside day. $78 is important, so we can be looking at XLE's high tomorrow and the break of 78 to see if that wants to give any sort of continuation there. What else? I lost my train of thought. AR. AR, one of you guys brought this up during the day, and shame on me because I had this written on my list. I'll show you guys right here. I had AR here written on my list, and somehow when I was reading through my list in the morning meeting, I just didn't bring it up. And it's unfortunate because I forgot saying it, because this AR gave like a really good initial move here. So my notes say you could be long versus 30.50 or long through 31.50. The opening low here was 30.67. So looking to be long versus like yesterday's low or this 30.50 area, if you could have gotten stock early on, was a great trade. Or the buy through 31.50 if you took that there, that was a really good trade. Similar was this TEL, a little bit different though. On an intraday basis, I called out this TEL here on the break of $6 as a trade with a stop loss at $5.94. So $6 worth of risk. Gave a great move here too, and then unfortunately, rolled over and failed. But I thought that one looked nice. I had Upstart on my list as a buy, but right away when the market opened, I was like, guys, growth stocks aren't right. Forget that idea. Upstart had gotten a buy initiation today from one of the analysts, and $100 is a support level. So I thought we could maybe look for a buy at $100. Very quickly, we could tell growth stocks were the weakest names in the market, and Upstart was not right, and to avoid it. So hopefully no one got hurt in that. I know this Tilray ended up not closing well, which is no surprise because it seems to be Tilray's MO all the time. But we did have Tilray on the list. I had discussed a buy at 750 pre-market versus a 720 stop. The problem was by the time it opened up a lot higher than that, but it pulled back, and then Will here on the team called out a great buy as it pivoted off 750 to be able to buy and capture this upside move, which was solid. Then that one eventually was relatively weak and failed as well. And I'm trying to think. I thought that there was like one other solid one here that we called out, but I can't remember what it was. But anyway, the point is, I guess there's a couple of points. One is, we work in a game of probabilities, right? And all you can do for yourself is to do the things that should provide you consistent profitability in the long run, and be consistent with that approach. And sometimes situations that are lower probability will happen and will cause you to maybe lose some money or have a losing trade or whatever it is. That is going to happen. It's part of the business. The most important thing is to have the rules in place for risk management in case the probability situation occurs where things don't work out. And I think that happened a bunch today. At the same time, by doing good pre-market research, I see you guys giving a couple good ones. We spoke about Mosaic and CF, pre-market. Those tried to give initial moves. The CCF ended up closing very poorly. This NAT was an idea that I had in the morning meeting as well, based on some pre-market news. I don't know the stock well. It doesn't look like it moved very well. It doesn't look like it failed either. But yeah, the point is that even in these tougher days, by doing your good pre-market research, figuring out what stocks are in play, and understanding your probability of success in different areas, you can still find good trades even on days like today to try to make a couple bucks. And if things don't work out, then it is what it is, and you kind of just have to manage your risk on the trade. And you always need to know your risk on anything you get in before you're even in it. And that's just it. So that's all I got for you guys today. I'm doing a Twitter space, which I've never done before. I'm not a big Twitter person. I've never been in a space. I'm doing a Twitter space at 7 o'clock today. I don't know if that's things that people can just regularly sit in or not. I think it's through TrendSpider, that app. It's related to athletes who are involved in trading. So I know that I'm going to be doing that. It's at 7 o'clock Eastern. Kira from the I don't know what they call that, David Prince's virtual trading floor. I think she was like a rodeo athlete at some point in the past, which is super cool. So she's in that, and I think a couple other people are as well. So I'm going to be doing that at 7. I don't know if that's something people can sit in, but if you're able to, I don't know how. I can't give you the information on how to sit in it because I don't even know how to get into it yet myself. and I know very little about Twitter from a user perspective, though I'm working on that. I'm trying to use that ProDesk VTF Twitter more often, so definitely give that a follow if you don't already. And also, if you're following me on stuff, give the YouTube a subscribe. What is the sponsor's name? I think it's TrendSpider. I think it's the same people. Here, I can try to look it up if you want me to really quick. It's not on my calendar. What was that lady's name? It's called, I don't know, they're calling it Athlete Space, but it's brought to you by TrendSpider, and the person I've been emailing with is the marketing events manager at TrendSpider. So I don't know if that helps you be able to find it or not. Yeah, or Will is saying, so I'm going to be doing it through the ProDesk VTF Twitter. So Will here is saying that if you follow the ProDesk VTF Twitter, you can just log in on your phone at 7, I guess, and you'll be able to follow along with it. I really don't know what to expect. I don't know what they're going to be asking me, but as you guys know, I'm always up for just chatting about stuff. Anyway, let me take a look at your questions. First I'm seeing here is from Rich. Can you please further explain the SPY call out? What did you see besides the level that you told us to buy back through? That's pretty much it. So it was a combination, the thought process was a combination of things. So I had in my mind, so first of all, you've got small time frame downside extension. So if I am taking a counter trend or counter momentum type trade, I do want to be buying on the way up, not on the way down, and I want it to be extended. So we do have the small time frame extension. I did have a bias. I like having a bias. I like having what I call a qualitative fundamental bias. I find that it helps me tremendously, but the mistake that traders can make, and this is a mistake that I've made in the past, is when you have a bias on a stock or you have a bias on a market and you believe in that bias so much that you don't manage risk properly. So I think it's a great thing to have a thesis that creates a bias, and if your technicals line up with that thesis, you can have more conviction on the trade. But you also need to make sure that you're going to be wrong sometimes. No one here is perfect. Everyone has ideas that are wrong. So you can't put yourself in a situation where you're so biased towards something having to happen. Financials have to go up, energy has to go up, Apple has to go up for whatever your reason is, that you don't manage risk. Because like I said before, and I'll say it again, the worst losses I've ever taken in my entire trading career were when I was so convinced that I was right, that I didn't have a game plan for being wrong, for how I was going to lose money when I was wrong. That's led to the biggest losses in my entire career. But still, in this situation, I did have a bias towards up in the market, even as the market was breaking down here, for the reasons I said earlier about the $95 billion Fed runoff being, I think, an extremely low number. I viewed that as dovish. I thought that maybe that could help the market take a bid. But I also understood the technical information of losing this low as being significant. But now we're well below this low. We've sold up very hard here for 15 minutes. We're extended to the downside. And then it's just a simple, we used to call this a handy trade when it breaks level and comes back up. I won't explain why. But that's basically what this trade is. So we had already spoken about pre-market and yesterday afternoon, the importance of this pivot low. It's the only pivot in this whole up move. And it's kind of a minor pivot because it's really only from this one day. But it's still an important reference point of 443.71. So that was it. We like to buy, if you're buying counter trend or counter momentum, on the way up, not on the way down. So you don't just put your bid out in front of 443.71 and hope that it holds. You wait to see that 443.71 holds, or you wait to see the level break and you buy it back through that level versus the low. And that was it. It broke 443.71. It put in a low of 443.47. I said, hey, you can buy this on the way back through it, 25 cents risk. Is this a dramatically high probability of success trade? No, it is not. No, it is not. But the risk reward makes up for it. You're coming in here for 25 cents risk, buying 443.70. Even if you just get a move back to the 80 MA, you're getting a move that is going to be, you know, $1.50 on 25 cents worth of risk, so that's not bad. And if you can get further follow through like we did, it could turn into a much juicier reward. You know, eventually that 25 cents risk gave you $5 worth of reward before we had our next pullback and, you know, close with a little bit less on it. So that is the answer to your question, Rich, and I hope it helps. Scrolling through here on the VTF. Newegg triggered, but it triggered midday. Yeah, I only want to be involved in this Newegg if it's really showing that momentum volume, which maybe it did. I see there's really high volume here at the end of the day. $7.45. That's kind of your spot. Yeah, it first broke 7.45. You know what? Yeah, 11.15 is not my favorite time of the day to trade. But if you know that this is a momentum stock and you see it breaking that level on this type of volume, this volume is attractive to me with this type of stock. So you could have tried this Newegg on that break versus the low when the volume comes in. It's a lot of risk, though. That's what happened to me last time I bought Newegg, though. I initially had a lot of risk. I bought it just because the volume was coming in and it enabled me to tighten my stop up, which looks like you would have been able to tighten your stop up here as well, which actually maybe led to a shakeout here. It's close before giving upside continuation. So that's that volume confirmation that's key. But yeah, good pickup in volume here on Newegg, breaking back through this high with some sort of continuation. Not an A+ trade by any means, but one you could have looked at. From TG here, during today's pre-market call, you said you would be a cautious buyer versus an aggressive buyer. yet you bought a bunch of stocks pre-market. Can you explain the difference between cautious versus aggressive? Sure. So it's just basically sizing. I described myself as a cautious buyer this morning to recap. My concern, I said that the only reason why I wasn't being an aggressive buyer into this gap down this morning was that it was only day 2. If we were gapping down to 443 and it was tomorrow, it was day 3, I probably would have looked to be actually significantly more aggressive on those buys. I liked the area. I liked the degree of the gap. I felt that we were going to open up extended to the downside. I felt that that would lead to some sort of price correction to the upside. By the way, that didn't happen. So instead of being an aggressive buyer, I was a cautious buyer because I did think we would get that uptick off the downside extension from the common gap. But I was not having a tremendous amount of conviction because it was only the second morning. So that's why. And basically the difference is between being cautious and being aggressive is really the amount of stock I'm buying. So it's like I bought a little bit of a bunch of things. I bought a little bit of Apple. I bought a little bit of SoFi, which is now down after hours. I bought a little bit of Tallow or Tel, I forget which one. Bought a little bit of Path, a little bit of Pins, but they're all small buys, so that just in case today happened, just in case what happened today happened, I wouldn't be getting my face totally ripped off because I understand that it's only a day 2. But I still like the idea of buying some stock and buying back some stock on things that have been swinging and that I've been doing well on, given those other factors. But I wanted to, in this type of case, I would have looked to get heavier if I got a signal. And that's kind of what I kept saying to you guys is pre-market this morning was just like, all right, I'm looking for the pivot. I'm looking for the pivot. Okay, I'm still looking for maybe this is it. No, it's not it. We just didn't get that clear signal of that pivot actually coming that would have fulfilled my thesis of getting a price correction here. This market was so brutally weak this morning. It was really, really bad. So it certainly didn't do me any favors being a cautious buyer this morning. And again, I got a little bit lucky that the one that I bought heaviest was Labu. I really got lucky because that turned out to be the most relatively strong of anything that I'm in. And it happened to be the one that I bought heavy. And I'm not attributing that to skill. I'm attributing it to luck. It was the only reason why I bought more Labu than I did other things was that Labu yesterday almost got to my price target. My price target has been 20. It got to $19.56. I've sold a ton of this Labu on the way up. My positioning on it has gotten much lighter because of the fact that it got closer to my price target. And I didn't buy any on the way down all afternoon yesterday. So I've got a much smaller position. I sold a bunch at higher prices. It traded down all day yesterday. I didn't buy any, and I'm getting this gap down. I said, okay, I'm going to come in. This one I will buy a little bit heavier, just to put back a lot of the risk on that I had sold at better prices. So I bought a bunch of this thing at $16.50 pre-market, and again, it's just luck. I can't attribute this to skill. That the XBI decided today. There's no way I could have known pre-market that the XBI today was going to be as relatively strong as it was, even though it's been generally relatively strong to the Qs recently, and I usually compare it to the Qs. It tends to move, I think, more with the Qs than with the SPYs, because it's probably a bit more speculative in nature, and biotech is tech to some degree. I just got super lucky that the XBI here held up so much better than the Qs did when that happened to be the one that I bought heaviest. But yeah, hope that helps with your question, TG. Diego, on that SPY trade there, I don't think you wait for the bar to close. You buy it right back through the level versus the low. Don't wait for the bar to close. Assume that the fact that it traded through it is going to be enough to give you a good enough of a close on that bar. And again, it's such small risk there. That's why, as a general rule, so what do we always want in trading, right? We want a fantastic risk reward and a very high probability of success. It's difficult to have both. though sometimes you can find it. As a general rule, the lesser your space risk is, the higher the probability of you getting pushed out of the trade. Just by nature of the fact that it's a $445 ETF that moves sometimes dollars in a minute, and you're able to you're taking a trade on it that's only 25 cents risk. Inherently, that means that your probability of success is not fantastic. You could get pushed out, whatever. But the flip side of it is that it's only 25 cents risk. So the risk reward is improved by the fact that the probability of success is a little bit worse, if that makes sense to you. So I think you just take that trade right back through the level. You put your stop in at the lows. If you get stopped out, it's 25 cents risk. That was the risk you took. But you're recognizing that it is a legitimate trade for all those factors that we kind of went over. And if it can work out, and there were plenty of reasons for it to work out, that you could get a fantastic risk reward, which, this is a fantastic risk reward. You get, $5, maybe even more. Maybe this closes well at 448, and next thing you know, the market's at 450 tomorrow. You could get a fantastic risk reward off of that lower risk. Valeris announced a new contract. We'll take a look at that after the close. No sale to, okay. I would assume that if Elon Musk did sell Twitter today, that would be market manipulation. I don't know if that's market manipulation that he can get in trouble for. It's one of those crazy things, right? Like those people who have like a real cult following on the markets. I remember for a while Andrew Leff was like this with Citron, though eventually the Wall Street Bets people, I think, ate his lunch. But I remember forever I'd be like, Andrew Leff short stock. Andrew Leff says he's short stock. Stock drops 15%. Andrew Leff is immediately 15% in the money. Like, how the heck is that fair? So maybe we just got to get more people to follow the @ProDesk ETF. Just kidding. From Jackie here. I was thinking about taking SPY back through 446 today after the 240 candle poked the previous candle lows by a few cents. 240 back through 446. Okay. Before getting bought back up, it looked like we were pivoting off 5-minute ADMA and the VWAP there, but I hesitated on my entry and I missed my price. I was wondering what you think about trying the long here and what grade you would give it. Sure, so there's things I like about this and there's definitely things I don't like about this as well. I don't think that 446 is important outside of the fact that it's just where the market had started from, and that inherently does make it important. So if that's why you're viewing 446, fine. This consolidation here, I think, was more the trade. I think I called that out to like this inside 5 here if it breaks up. So I think that's more your trade. It's a combination of factors here that we were able to get back above 446. So we shook out all the people who were weak-handed, bought this initial bar. The weak-handed ones are selling into this move. The strong-handed ones hold on. It gets back above 446. It's letting you know that bulls are back in control. Then you get this bullish consolidation, which is potentially setting you up for higher prices. I like this trade better than the way you described it, though it's off of a lot of the same information, on buying the break of this inside 5. Looking for that to be the catalyst that gets it above 447, which I mentioned in real time there was important. If that becomes the catalyst that gets you above 447, now you got a good trade. So I prefer, like 446 to me, we know it's somewhat important because it's where it started from, but I don't think it's like an important like level or penny where you could just be like along all 446 or necessarily even these tails that went below it. I personally prefer the same thought process as what you're describing, but buying through the inside 5 consolidation rest bar high versus that low. That's my preferred trade. I think just buying purely like at 446 versus these lows is a little bit sloppier as far as where your stop loss is going to be, and a little bit tougher. And no matter what, whether it's the way that I was looking at it or the way that you're looking at it, I definitely don't view this as like an A+ trade by any means. But maybe like a B trade here if you had the same thesis that I had, and if you understand the meaning of this price action in this area with the volume and everything, and if you can get that break above, that you could be looking at this break here, then the real move becomes a little to the upside. We get it closed better than 448. We're at 450 tomorrow, and you got a good trade there. So I like it. I just definitely not like an A+. From Terry here, can you comment on names like Walmart, Pepsi, Procter & Gamble? Is it possible that they lead the market higher? Interesting question. So I'm just going to type up the XLP. Walmart I think made all-time highs today, which someone brought to my attention, and I couldn't believe it. Though I guess it's good for my PA. I got a personal account where I just do some buying and holding and some dollar cost averaging in companies that I believe in that are a little bit safer. And Walmart and Procter & Gamble are kind of both on the list there. I think I do PG in my IRA and Walmart just in my PA. So I was really surprised. I was not expecting to type Walmart up right here and see it at all-time highs, but I'll take it. I will take it. I don't like most of these names as short-term trading vehicles. They tend to not be momentum names, though this Walmart here is giving an incredible move as I have it typed up. Procter & Gamble is super strong as well. These tend to not be market leaders. You tend to not look at consumer staples as what's going to lead the S&P and the NASDAQ higher, right? These are defensive stocks. People rotate money into these things usually when they're afraid of everything else, but they still want equity exposure. Right now, I think it's very difficult, talking big picture here, for people to have, from an investor perspective, a good place to put their money. Because if you've got your money in bonds right now, like the 60-40 portfolio, that people talk about as a great investing approach for markets, and there's obviously some truth to that, has just been not good. Has just been not good here in the year 2022, because bonds are getting destroyed and stocks are not performing. So the 60-40 portfolio has not been fantastic, but people need a place to put their money right now, and people are like, well, where do I put my money? I can't put it in bonds. I can't have cash with 8% inflation. The stock market's getting wrecked. Growth stocks are awful. Well, maybe just let me go to these value type stocks that pay a dividend, and a lot of that rotation has gone into energy, and that's been more of our focus. Has been fantastic moves there. But I think for just regular people, they're like, all right, let me put money into these names because I got nowhere else to put it. And that I think led some of this PG move here higher in December. Walmart now is performing extremely well. But your question is, can it lead the market higher? That's not what typically happens because they're defensive. But it has happened in the past. I specifically remember 2013. The first half of 2013, the market was led higher by defensive stocks. People were worried about whatever the heck they were worried about at that time, a double dip financial crisis or something, I don't exactly remember. So it was led higher in the first half of the year. The market went up a lot, and it was led by defensive stocks. And then the second half of the year, the defensive stocks stopped going up because the funds now needed to play catch up, and they started chasing high beta tech. And the second half of 2013 then was led up by high beta tech. And I think the S&P finished the year like 32-33% on the year. So it has happened in the past where these types of defensive stocks can lead the market higher, but I don't think it's typical, and I don't think that you can look at that right now and expect it. I think that right now people are putting money into these things because they're fearful. What does dovish mean? From who's up? So dovish and hawkish are just terms that are used to describe interest rate policy, basically by the Fed. So dovish interest rate policy tends to be a accommodative policy that has interest rates being lower, and hawkish interest rate policy tends to be the opposite, where interest rates move up. So generally, you would think that dovish language or dovish thought process or dovish policy is good for markets, particularly for tech, and it's good for stock market multiples. Lower interest rates tends to mean higher multiples. I'm trying to remember off the top of my head where those terms come from. Has something to do with like hawks flying higher than doves or something like that. I'm sure somebody here in the VTF knows and can just give you that information. I honestly genuinely forget if like how the birds fly, but that's what it means. From Jackie here, adding to Jackie's question earlier about the spy trade that she spoke about, which was in here. If I missed buying the break of the inside 5, but that setup triggered, do you think it would be okay to place a bid at 446.01 and take the trade if I got filled there, so I can still take a decent tier size with my stop? I'm going to say no. I'm going to say no on that. I think that the best trades in the market only give you one chance to be able to get stock. So if you missed the trade, you missed the trade. If you miss the trade and then you're getting stock, it means one of two things. It either means you're chasing price, which means that you're going to have a worse risk reward, or two, it means that you were able to get stock when you shouldn't have because it came back down. And inherently, if a trade is giving you a second chance of getting stock, it means that you have a lower probability of success on that trade. So I'm going to say no on that. I'm going to say you got to get your stock when you need to get your stock, and if you missed it, you missed it. Hawks rip your face off. Doves are more docile. Hawkish equals aggressive. Cool. Yeah, birds. Something about birds. All right, gang. I'm going to end the meeting here. It's 5 o'clock Eastern time. Good meeting for a tough day. And I'm doing that, I already forget what it's called, space on Twitter in an hour. I think in an hour. So if you can figure out how to get involved in that, I think you got to give at ProDeskVTF, which is what I'm going to be using for it, a follow or something, and you'll be able to see that I'm in it. I don't exactly know, honestly. Oh yeah, 2 hours. Thanks, Will. It's in 2 hours from now. I honestly don't even know what they're going to be asking me or what we're talking about. All I know is it's specifically related to having an athletic background and being a trader. So have a great night, everybody. I will see you tomorrow.